Hey traders, so today we're gonna talk about what is stock trading. So imagine a very large company, for example, let's say Amazon. So think of Amazon as a very large company and imagine it being divided into million different pieces. Okay, so when it's divided into millions of pieces, each of this piece is called as stock or share. So when you own a share, you basically is owning a tiny fraction of the company. So stock trading is the act of buying or selling these shares, and what is the ultimate goal is to make money, to make some profit. So there are two kinds of trading. There is long term and then there is short term. So long term investors, what their ultimate goal is to buy this stock at a very low price and then try to cash out when it reaches to the top. Short term, what they do is they buy, they sell, they buy, they sell. As the market is going up, they buy and then they sell. So that means they're basically buying low and then selling high, buying low and selling high. So that is their goal. Short-term traders. And long-term traders they believe in this company, so they buy a small piece of the company and then they hold for long term for capital gains. Okay, so that is the simplest way I can explain. So next is, what is stock market then? So stock market is not a place, but it's a network of exchanges. So network of exchanges so you'll have heard of New York Stock Exchange, NYSE or NASDAQ. So these are the place where buyers and sellers come together to trade stocks. So this is like a one giant marketplace for them to buy and sell. So there are two goals. Those people who come here and try to buy and sell, their two goals is this same thing. Their two goals is either they want capital gains or they want to gain some kind of dividends. So dividends, I'll explain that. So first we look at capital gains. Capital gains are those who are basically buying low and selling it high. So if you buy a share for, let's say, $100 a share at this price and then sell it at 120, so you have made $20 capital gain. So this is the main focus of this kind of traders. So dividends, what are dividends? So dividends are, the company is basically distributing a portion of their profits to the shareholders. So this payment is called as dividends. where most people, the long-term investors, we call them, they will look for this. Short-term traders rarely look for dividends because they are looking for capital gains in a shorter time frame. Long-term investors, they look for dividends because the company will pay out a portion of their profit to the shareholders. So this, you can look at it as a bonus that the traders get who owns the stock. So companies can sometimes pay yearly dividends, they can pay quarterly, or they can pay monthly, or they can pay semi-annually. So twice, 6 months, every 6 months they'll pay once. So these are how they will pay out. So I'll make a video to show you guys how to find this kind of dividend stocks for every type of market. You can look for US market, you can look for Singapore Stock Exchange, Malaysia Stock Exchange, any stock exchange. You can find it using TradingView. So there will be another video on its own. For now, we'll just talk about stock trading. So why do stock prices change? Why do stock prices go up, or why do stock prices go down? So everything is based on supply and demand. So let's say if more buyers wants to buy that stock, then the price will go up. Let's say if there is a lot of more sellers, then price drops. So this is the basic things. But what influence the supply and demand? So for companies, the influence a few things. Company's performance. So company's performance, like earnings report or product launch or some positive news that maybe they are acquiring new things, or anything that is good for the company that increases the demand for more buyers to enter the market. Another one is industry trends. So let's say currently, like now, everything related to AI is going up. So if the company is going into AI, then there is demand for the company to rise up. And then economic news, things like interest rate. So is the rate currently high or low? So if the rate is expensive, then companies would not borrow money, so tends to drop. If the rate is cheap, company tends to borrow. When they borrow, more money is flowing. So when more money flowing, company demands goes up. And then you have inflation reports or unemployment figures. Things like this can affect the market. Okay, and last is market sentiment. So let's say if everyone is talking about, let's say like Nvidia, everyone is talking about Nvidia back then, it was just going up and up and up and up. So market sentiment is purely driven by fear or greed. So when there is a lot of fear in the market tends to drop, and when there is a lot of greed, market tends to rise very fast. So it's not just because of one thing it affects. So many different things affect the price of the chart going higher or down. Okay, so next is we will look at, okay, let me see. Next we will look at trading versus investing. Trading versus investing. So what's the difference between someone who is doing trading and someone who is doing investing? It sounds the same, but there are few things which are different. So first, for trading, the time frame is short term, where they look at days or weeks or months. These are their time frames to do trading. What is their goal? Their goal is to make quick profits. From what? From the fluctuations. And how do they do their analysis? Usually they do by technical analysis. So technical analysis, things like chart patterns, things like price patterns, they study the chart basically to see whether is it overbought or oversell, or is it in a trending market, or is it at support or resistance. This is technical analysis. And then how is their activity, like what do they do? So it's very high frequency of buys and sells. So let's say in a day they take one position, then they sell. If the market goes higher, they sell. In a week they do multiple trades. So that's considered high frequency. And you have also high frequency trading systems where they buy thousands of shares in a second. That's all run by machines, where human can't achieve that kind of level. When I mean high frequency is, as a trader, you buy today, you sell today, you buy another share, you sell today. That is high frequency in terms of this. For the risk level, it's generally higher risk, and it needs a lot of attention, because let's say you buy today, some very bad news happen, market drops 10%. You just lost 10% of your equity. So this is quite high risk. But in terms of stock market, in terms of cryptocurrency, in terms of forex, stock market risk is pretty low. It doesn't move like crypto, 80% down, things like that. You will see gradual drop. You don't see sudden drop. So these are good. So next we talk about investing. So investing looks at long term. When you talk about long term, it's more to looking at years or decades. So things like how Warren Buffett is trading, he takes a position and he scales the position and he reinvests his position, things like that. It takes years to build and snowball into a very big position. So their goal is for gradual wealth accumulation. So if you have like $100,000 sitting around doing nothing, rather than keeping in the bank doing nothing, you can invest in a very good stock that you can slowly every month or every 3 months or every 6 months add into it and gradually increase your portfolio. And this are usually done by fundamental analysis. They look at the background of the company. Let's say if the company can survive any recession, if the company can have enough cash flow, things like that, all the things about the company, or they look at the whole industry as whole, whether this industry can last or is it just a bubble, things like that. And how does the activity, so for trading is more to high frequency buys and sells, this is more, investing is more to buy and hold strategy. That means you buy at the bottom, you hold and ride all the way to the top. So it's a very low activity thing to do, and the risk is generally lower risk, and it's more to passive investing, where you sit and you don't act very fast. You act maybe in 6 months time, or take your consideration in maybe another 2 years, see how the stock is performing. So these are just the basic stuff about stock trading, what you need to know, which path you want to take. You want to go into trading path or you want to go into investing path. So that's very important in stock, because some stocks tend to be more into the riskier side, where some stocks is in a generally in the lower risk. So let's look at this chart basically. So let me remove all the drawings. So look at this. This started in 1980. This is Apple stock. So this is basically what it means to be buy and hold. You see, it started at what price and then now it's at what price. So some traders do buy and sell as the price is going up and down, but look at it from this point of view. You're buying and then you're holding. Doesn't matter where you start, you're just buying and holding as the market goes. So look for well established companies, like let's say Amazon, same thing, Nvidia, same thing. So this is the way how they do investing, where they buy and hold. Trading, in the other hand, you will go to a lower time frame. This is in weekly chart. One candle is 1 week. You will go to a lower time frame, let's say 1 hour or 4 hours, and then you try to predict, market, is it this week, is it going to go down, or this week is it going to go up? You make prediction based on that. So that's where it says a bit higher risk, because let's say if you would have bought at this point, yes, it did go up, but for, let's say, from here to here, close to half a year, you will be down of your position. And if you are going into more intraday, like buying and selling, you will be losing money. If you don't have the proper psychology and emotions to withstand that, you'll lose a lot of money doing this. So you'll go into revenge trading and all that. So you don't need all that. It's better for stock market, you can just buy and hold and ride the trend. So you have different kinds of stocks, where we can see the most so what you can do for a start is to get used to the movement of a stock. You can go and look for these certain kinds of stocks and see, go through a list of them, and then you can put it in your watch list and try to take some trades and see how the movement, whether you like it, how the market is moving, because stock follows a certain timing. That's the normal timing. It's not like forex, where it's 24/5 basically, because Saturday Sunday it's not open. It's not like that. Stock market, it's its timing, it opens, it has pre-market, post-market and all that. So try to use paper trading and buy and sell few stocks. Get used to it. If you like the way how the stock moves and it's more stable, you think, I feel this is a very good way of trading, don't have stress, then you can slowly go into opening a online trading account and you can get started with it. But always go demo account first, test it out with virtual money, see how it goes, see how the whole process is, then you can go and make your own decision. So there is actually a lot of stocks, and this is only one country stocks. You can go Canada, you can go so many different countries kinds of stocks you can go and try to look. But always the most liquid market is in the US. So if you want to be looking at trading where it's more higher risk, it's always better to go at US stocks. That's where I feel, because I've been exposed to US market, US stock market, so I've seen how the market moves and all that, so it's better to stick with that. But even I am not to say a professional stock trader. I do take positions for long term and also short term. So I hope you guys learn something in this. If you have any question, you can always let me know down in the comments, or you can even message me, things like this. So I will make another video on how to screen your stocks based on what you want, what are all the metrics used for looking at a very good stock. There are actually so many things in looking at the stock and trying to decide what actually works best for your type of trading. So that will be in the next video. See you guys in the next video. Thank you so much for watching.